XRP, baby, we back. We back. Don't need no love. Don't need no best friend. Cater to you. All right. So when you look at it, right, when did it break out that 190 range? You on this XRP right now, right? You know, that's our favorite. So around here, when it took that little large swing up around the 160 range, I was like, hey, you might want to get some of this, right? Because we had so much upswing to give. And after that, this around the range, I told them, hey, you might want to, jump in. But I also led with, I'm not a financial advisor or a fiduciary. I'm just a brother with some ain't no laptop. All right. Let that be known. Yeah. So with this, I said, hey, dog, it's going off. It's cheap. It's $1.60 something. Buy some. Just put $20 on it, right? I said, you don't like it, just throw some change at it. You feel me? Like throw something on it. Put a little change on this. That way you can at least participate. If anything happened, you made some money. If not, it is what it is. Because when you look at it, let's go to the weekly chart real quick, make this simple. All I did was like, hey, what was our last high? Right? Boom. I said $1.90. Okay. Cool. That's simple. What is this? Then I said, what's the last high? Boom. 332. So that's why I said comfortably $3 is a decent target, right? Because the simple fact we had so much upside way over here left on the table. Now, it's other ways we can determine like which way, like how high actually gonna go, and we can get some projections in by using our field extension, which is a great tool, right? So we're gonna start there, go down to this low here. This is the low. And boom, they're going to project our levels for us, right? So we got 339, 431, 497, 531, 580. We have levels now. So we are not shooting in the dark. The last high was 332, which is our 61% retracement, which is the 0.618 fib extension level, right? Do you know anything about fibs? But this is our level. We have it. Boom. We know what's going down. Boom. And we can safely say, hey, it could go to any of these levels. If it takes this high, of course, we will go up. With all the news that's coming out, we got that new congressman coming in who's pro crypto. The U.S. aiming to be more pro crypto, so we're gonna get more utilization of it. Fidelity, Bank of America, Wells Fargo, Chase, they all starting to, adopt crypto and say you can start holding it and doing all the other little fancy things with it, right? Y'all seen the articles. So they're going this way. I ain't gonna say, hey, you know what's best for you? You'll participate. These levels are cheap. Uh, they are dirt cheap, right? Don't get caught up in rug pulls. This is a legit product here. They got a lot of use case. The more use case, the more value they're gonna have. But then to draw these numbers up, they're gonna add more use cases for this crypto, right? You don't go out and buy the meme coins. You invest in solid cryptos with use case, not oh, it'll go to the moon because you think so, right? Or somebody told you so. We don't go for the meme coins. We go for solid coins that has a use case with a lot of bagging, corporate bagging with it, right? And those are the ones I like to focus on. I don't like the craziness because simple fact, yes, you can make a lot of money or you can lose a lot of money. It's, whichever way that ball falls, right? My main focus is buying a consistent amount on a regular basis, averaging in, because as the market swings up and down, up and down, up and down, you're going to get some highs, you're going to get some lows, but dollar cost average, you'll have a decent buy-in point, right? Now, everybody was buying in when XRP was down here, while they had all the indecision was going on, right? While I was in the 50-cent range, just buying, buying, buying. You would have been buying on a consistent basis. You would have built a large portfolio. Now, when it started pumping up like this, and now we up in this range, you have to be very strategic about how you want to approach getting your XRP, because at these levels you're going to be overpaying for the price. You have unknown upside now we really don't have a clear target of where it can go. I like when we have price action to the left, because they give me a clear target of where price can go or where price cannot go, right? And they allow me to say, all right, cool, best case scenario is here. But with them adding more use for this, we're looking to have new highs. It's still a fairly new product here. It's very new. So you want to be smart about where you get in at and where you choose to get out. Now, some people looking at for a quick flip. Cool, you get in, get out, play the swings, right? Because it's volatile. But me personally, I like to sit in and I like to invest. So I'm setting it and forgetting it. I'm not tripping on when it's coming down, when it's going to pay off. I'm looking at the long hold. I'm not going to do the quick flip. I don't need it. I can set that money to the side and I'll be fine. That's why you invest a certain amount. That way you don't be in a bind. You ain't looking at it, licking your chops like, oh man, let me get some of this. Let me get some of this. Let me get some of this. No, set it and forget it. Accumulate. My goal is to accumulate so I can have a significant amount of it. Because when these little couple of dollars pops here and there, that's cool and all. But what's the big picture here, right? You got some people trying to project this to $35 a coin and more. With a proper use case, that is possible, very possible. So you don't want to be the guy who sold a Bitcoin for $10 for a pizza or done all this other crap. And when it hit, whatever it's gonna hit, you crying, talking about I had so much, I had so much. Be patient, set it and forget it, walk away from it, right? It's it's very bullish right now. So I don't like for it to go so vertical. This was decent right here when they did that in December. When they came back down and built some consolidation, built a base, and then rallied back off. I like seeing that, but I want to see more of that. I don't want to see the explosive moves, right? Let's put on a 20 EMA. Oh, that's my 513. No, one more. Okay, I got a 34 SMA. I'm going to change this to a 20, right? Well, we'll do 20. I want to see, I don't want to see too much of this, because when we start getting those explosive moves, price got to retrace back to the mean. So you're going to get a large swing back down to find support, right? So let's drop down to a daily chart. Boom. So you see what I mean right over here. Let's highlight that. All right, so we had that blow off, boom, 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 riding, and then you seen us come back. It was gentle, right? But eventually, what happens, we will trade below. At this time, when you start having retracement back to the moving averages, that's your time looking and buying. We especially looking and talking about getting into long-term swing positions or long-term investment positions. You want the price to retrace back to a decent time frame, EMA or SMA, whichever one. You don't want to be a fast one. You want it to be decent. So a 20, 21 and a up, or a 21, 34, those are great moving averages. So you can say like, hey, on higher time frames, when we trace back to this, I will buy more, right? Or I buy significant more than usual. I have mindset to auto buy on a weekly basis because I want to accumulate always, because crypto never sleeps and it has nice swings. So I, expect to pick it up on those swings. And this is one. Now, as it was doing all of this, you didn't believe, people begging you. Now we got some of this. Now, the problem is you have people who bought in at $2, $2.90 and above, even at the $3 mark. You have people FOMOing into this trade, right? Not even necessarily trading, they FOMOing into this coin, which is good for me, bad for you. Because you see this candle coming in, right? This is people taking a profits this day that's opened up. So let's go down to the hour chart real quick. These people are looking, this is the Asian market now, they're looking to take profits because they've been in. You probably got somebody jumped in on this 20 SMA right here on a wave, caught that, boom. Now he's taking profits because they not as greedy as you. You never understand the next man greed. So when you thinking to the moon, they thinking up the street. That's it. I know guys who put so much money in the market where they only have to go 2 steps. They pay, they get out the way. And when they get out the way, you hurt. And that's what they do. They say, oh, well, that's good for me. They'll say, oh man, I got 10%, 3%. Great return. I'm fine. I'm going home, right? I know guys that only like 10% because they put so much money in the market. That's all they want. And that's a great 10% move from point A to point B. So look at that, right? So let's say you catch it off of here. Entry was the high. Boom. That's a 41-cent move. So you do your calculation of value. If you threw a couple of hundred, a couple of thousands, you know, definitely a couple of thousands in on that, 41 cent per coin. Hey, talk to me nice, right? You add that up. These guys don't have to be there all day. They don't need $2, $3 moves. They just catching the waves like that, getting out the way, and they reclaiming price because they want to do it again. And they know you got in over here because you couldn't wait. You got in over here because your homeboy said, did you look at XRP? And now you wishing you had more. So you going to get in. And when they see that spike in this said candle here, let's go down to a lower time frame real quick. And I'm going to show you how it plays out every single time. This was that institutional spike. There's somebody throwing some more money in. They see your food behind coming with your orders. Yeah, okay, cool. We going up, we going up. Now they taking their money back out, reclaiming what they put in, taking their money back out. That's this candle here, right? And this your foolish behind holding the bag. 3 candles down, 3 black crows. That's a bearish formation, right? They're coming back down. They're going to find some form of support, shake you out. You're going to panic sell, and then they're going to buy it back up. So let's say, hey, what's a good buying point of all these guys, right? I want to find a low. I probably go from this low to the swing high, right? All right, we almost at 50%, 60%. Where are they going to go? 70%. Which one of these targets are they going to feel comfortable getting back in? Or will they say, hey, I'm good at a 60 piece, right? But that's me measuring that low. But what if they want to come from this base? All right, cool. Now we are currently 50% off. You just lost 50% of your value by jumping in at the wrong place. Right? If you got in at the high, you down 50% on that position. Almost 60%. About to get a new candle in 4 minutes, right? So these are things you got to think about even in your day-to-day trading. If you're jumping in at the wrong place at the wrong time, FOMOing into your trades, you can lose trades even if it is going in your direction just by simply not being patient and not being tactful of where you get in and where you get out at. When you're not being tactful, these traps are set there for impatient traders with no discipline to get taken advantage of. And the guys who has the discipline and the patience who know about when to get in, when not to. The ones who don't hesitate when they see a smart investment, they get in and they go along for the ride. The others who FOMO in, who got to be convinced when the opportunity is good after it took off, well, you're getting swept right now. This is them sweeping you. Congratulations, right? That's how that goes. So you want to be mindful of how you're moving. You just don't want to move any kind of way. You want to be very mindful of this because this is a prime opportunity. What we're witnessing right now is what happens to people all day long. Run it up, drop it. So look what they do. Boom, run it up. Boom, run the base. Boom, run it up. Boom, run the base. Boom, ran it up. Ran the base. Run up, base, up, spike. Now we got a consolidation. Now we're getting the tank. This thing can go all the way back to low if they wanted to. All they did. And I love the consolidation part. So when it consolidate like that, come on now, cheese really gonna slide off the crack. This setup happens all the time. It's about when you getting in and how you're gonna receive this. These people want their money. They're taking it out the market right now. As you see this, If you hear live, you seeing it live right now. If you're gonna be watching the recording later, hey, it's real time sometime, all right? It's 5 o'clock somewhere, like they say. Make sure you like, subscribe, and comment on this. Appreciate that. Throw that plug in. Ooh. All right. So this is reason why we pay attention to price action. Look at the breakouts, the breakout traders in the market, and then we also watch the size of the candles. After a while, you see how they start thinning out, and then you start getting these explosions where there's lack of volume. The volume is leaving. The price, the money is not here. So eventually they set in traps. So when you get this explosive candle out of nowhere after getting all these small candles, just be patient. A reversal is coming. It hits some block. They're going to be taking some money out. It's just a matter of when. Look from here. This was a decent pullback, right? So let's run it from this base to this high. I'm going to focus on this. Oh. Let's see how much did they take back before they decided to go off me. Lined up. So they went below 65%, went to almost 78% off, right? Back into this fair value gap. Deep in there too. Boom. It went deep in that level. Way back in there. Okay. Went in there. And then they busted a U-turn and got up out of there, right? But they went 78%. They reclaimed 78% of the price put into this market to drive it back down. So that's telling you what they're doing. They're pumping it up and then they dropping it a very significant amount. They are reclaiming that price, taking that money out the market, and then from there they'll run it back up once they get some nice liquidity. Once they get you to sell your position, they're gonna buy it back up at a discount and they're gonna run it back up because they playing the numbers game. So you think about it, what is your upside potential? Let's get rid of this, right? So this is why I always like looking at it. If I take this 78% off, what's my upside potential here, right? All right, I got 20 cent back up. That's a 20 cent swing. So if I can catch it 26, 20 cent, swing back up, or if not, worst case scenario, right? Let's say it's 16 cent. Well, that's enough money for somebody who putting up 10, 20, 30, $100,000 on one position because they got it and they crazy enough to do it. They'll put it up while they trading the prop firm. They can really run it up, right? And they're going to put that on their position. Boom. They'll take that quick little pop. Or it could be done. They could just say, hey, we're going to pop it up real quick, get you to buy back in, and then they liquidate it some more because it's not their buying level. That's not what they want. They want it lower than that. They want to drive it back down into this zone we got with the purple box, right? Because they come back, there was a fair value gap the first time, but eventually these like to turn into order blocks. So they can pop up out of there anytime. So they can probably drive back down to 293. All the way down to like 285, 290, anything in that ballpark, they can drive it back down there. So these are things we're looking for. And we don't want to just jump in and out anywhere. We want to pay attention, be attentional, and get it how we live, right? That is XRP for you. Man, they are definitely closing below. Got closed below the 21 SMA. So they should see some bear action. But we back out to the higher time frame. Where are we at? Look where our moving average at. Let's get rid of these fibs, clean this up real quick. I will leave that one. But look where the moving average at, right? 290 is where our moving average sitting at, right? 290. Price can come all the way back down here to find support. That's why I say I don't like it when they do all this jumping off, right? I want it to be smooth. They kind of got besides themselves. When you get besides yourself like that, things get out of control. You get large swings in the market. It's not a good time for nobody. It just crap. So with a smooth swing, you can catch the price and you can have a good go at it. Now, I have another example. I was looking at Apple today, right? Oh, let's get over there. So I'm looking to do a day trade on Apple. So I seen it pop up this morning. I'm like, okay, great. It popped up. I ran my field from the low, took the low to the high, right? And I was waiting for it to at least get back down into the 50% range, or at least a decent 38 to 50%. It did not. It said, I'm going to hold right here and I'm just going to keep going up. That's not part of my trading plan. My trading plan say I want this 50% off, or at least 60% off. I prefer 60%, but I catch a 50 piece. I'm cool with that too. But I didn't get that, so I did not pull the trigger. I left it alone, walked away, and I sat on my hands because it didn't give me what I want. Yes, Apple closed up pre-market, but look at all this consolidation. It wasn't really doing anything. And with that, that would have been wasting time on a contract. Anytime I trade Apple, I'm going over 30 days. I got to get 30 days or more, even if it's going to be a simple little weekly, swing trade, right? I probably would have held this no later than Friday. I just wanted a quick little move and I'm out the way. But I buy time on Apple because it moves slow until it's ready to go. It didn't retrace, so I sat on my hands because I wasn't going to be part of no science experiment at all. At all. I wasn't going to participate in that. So I stayed out the way. But once again, it's another example of you wait, pick your targets, be patient. If they don't come to your levels, you see my alerts are still sitting here, right? 296, boom, 235. I was waiting on it. I was waiting on them to hit. You feel me? I was waiting on them to hit. These are my alerts. I was waiting on them to hit that level because I was going to come and execute, do what I got to do. They know why I'm here. I know why they here. They know what I came to do. I know what they came to do. And that's why we have to do what we have to do. They didn't come to party. We didn't party. It is what it is. But sitting on your hands, being intentional, picking out your targets, and hitting your key levels is one of the major keys to having a successful, pain-free trading day. Let's keep smooth, right? Let me see. Who had another good one? Oh, yeah. Gold was a great one. Gold did something this week that I love to see. Let's slide over there. Let me break this down for you. Oh. Okay. Friday. So I want to mark out the Friday high. Oh, was my Friday low? Should be my Friday low right here. Oh. Mark this bad boy out. And then want to show out. Okay. Now from there, I'm gonna mark my New York closing price. Boom. Got it, right? So if you pay attention to the previous week, we had so many updates, right? Monday, Tuesday, Wednesday, Thursday, Friday, right? All bullish days. This bull, right? We have to have a reset. Now, coming into this Monday, guess what? Over at night, the London market, we below the Friday closing price, right? Tug on it. Wait, let me go on and throw it on it. Below the Friday closing price. This is how we close on Monday. Okay, great. We got our first red day, right? Boom. First red day. All right. So that's what we get, right? Then from there, look. Okay, we got our Monday low. Cool. So we took out Friday low. So we have a Monday. It's showing, in most cases, it shows a nice little swing to the downside, right? So that should be loud. Okay, cool. We got that nice little swing right there. We're going to probably be doing a range expansion to the downside. You think you're getting bearish, right? But you're looking at gold currently and it's up. What happened? Well, that's why you look to the left, right? Over here, but you didn't catch it. You see how price came down? All right, let me highlight this right here. This is Wednesday. See how price spiked up, came down, folks, solid spiked back up. Price retested here, right? Well, that's a block. You didn't catch it. You probably didn't know what was going to happen, right? So I'm going to go from here, see where that candle block close at, catch those, boom, come on down. Look where price stopped at in reverse, right at this level, right? Same thing, you had a reaction right here when the price came this level. But you had price dip down, form a base. You know, you can get 3 bearish candles, one bull candle form base. Price tested this level, right? But this time, price didn't hold because it was coming lower. It wanted down the block. So that one is screaming eliminated, right? So once we seen them take that low, we took liquidity. Price came up, and you had one simple play of a quick low-hanging fruit, right? Opportunity. If you seen that block, you could have traded down into that, right? So say, man, let's see what's going to happen here. It was wild trading, but you knew you at least had 60 ticks. You crazy enough to take that. There's more power to you, my boy, right? Because they're going to take the low, which is fine, part of business, right? But they ain't the business I want to be in. I'm going to let them. If I know it's a block there, I'm going to let them do what they got to do, get in line with the higher time frames, and I'm going to make it do what it do, right? I'm trying to see what it going to do, son. Do something with two, son. You know what I'm talking about? Yeah. So what happened? They hit that level, 9 o'clock, New York. Boom. Boom. On Tuesday, we had CPI or PPI? I believe it was PPI. Let's look. I don't want to be throwing stuff out there when I got the calendar right here. I can just look it up. So Tuesday was PPI at 8:30. Oh, problem solved. That quick, right? Always double check so you don't be seeing stuff. So that happened. Boom, 8 o'clock, price hit, right? 9 o'clock, boom, New York open, price flying. Boom, boom. For the rest of the day, price reversed and went up. Took the London high out. Okay, great. Now look at it. It ain't coming back down here no more. When the Asian market hit, right? Boom. Next candle. Boom. We ain't coming back. We gone. Taking out what? Monday high, going for the Friday high. That's their target. They're going to take that weekly high because that was last week high. So they're going to 9-10 take that out, right? But the goal is to get in line with the higher time frames, get in line with the higher time frame moves, pay attention to how everything is grooving, moving and grooving, right? Because this was the closing price. Boom. You just pay attention to the closing price, which the way price is going, and you say, well, it's going bullish. I know for sure I got a Monday high right there. I got a Friday high. TP1 always Monday high. Enjoy yourself, right? So I ain't gonna hit y'all across the head too much. Move on and leave that right there. But always stay smooth. Don't overtrade. Sit on your hands. Come up with a viable strategy. Work your strategy. If you got a paper trade. Always invest. Never over leverage. You'll be okay.